All right, welcome back. We got our weekly stock market update, and we are looking at a red market this week. We're going to look at some of the charts, and then we'll look at the heat map, and then we'll go over some of the news from this past week. When we're looking here at the Nasdaq, we had 5 red days in a row. Am I counting that correctly? Looks like 5 red days, with Friday being a puke day. So Nasdaq was down 2.5%. I think it was almost down 3% at its lowest point. But when we zoom out here, we're just kind of giving back some of the euphoria from last week. As I mentioned last week, nothing has changed fundamentally, but people's expectations or uncertainty when it comes to the election. Uh, so it looks like we're just kind of coming back to reality here this week, which is a good thing. When we zoom out here, we are in a very nice long-term uptrend. But it would not surprise me to see a little bit more of a pullback. Nothing crazy, but it would be healthy for the market to do that, and then we can move forward and make our next leg higher. You don't want things to just shoot straight up. You don't want to have multiple weeks like we had last week where it just keeps going up and up and up and up. That's not sustainable, and that's when you have some really tough red days ahead of you. So let's keep scrolling down. We look at oil doing just really nothing, keeps chopping around here, $67 a barrel. So oil is continuing to just chop sideways and stay under 70 bucks. The Russell 2000, we'll see what happens here. Would not surprise me. I've had these drawn out for a while, but it wouldn't surprise me if we touch this peak again and maybe make a pullback. Who knows? I've mentioned before with the Russell 2000, the small caps, there's a handful of good companies in here, but it's a big basket of, to me, what just looks like junk. So when the market's hot, the Russell 2000 will be hot, but when the market's cool, the Russell 2000 is very cold. So I do think there's a handful of small cap stocks that are really good companies, but I don't think there's 2,000 of them. So I just generally avoid this index. When we look at the S&P 500, similar to the Nasdaq, a little bit of a pullback, not 5 red days in a row, but we had 2 big red days in a row, and we're just pulling back a little bit from the all-time highs. We are back under 6,000, so that's interesting to see. And then we've got the Dow Jones as well, holding up a little bit better than some of the other indexes, but still pulling back from the all-time highs. When we look at gold here, continuing to be red, but still gold really having a nice year this year. Wouldn't surprise me if we keep seeing some more selling in gold. Maybe we touch this VWAP down here at 2358. Now that the election is over and there's again less uncertainty when it comes to geopolitics, maybe people are saying, let me rotate out of some of the gold and go into some productive assets. Because you hold gold for very bad times and potential inflation hedge. Let's go ahead and take a look at Bitcoin. Really crazy week this week on Bitcoin, all-time highs, and we are butting our head up with the all-time highs again at $91,000, potentially crossing 100,000 this weekend. So congratulations to all you crypto people out there. But this is just a phenomenal chart. We consolidated for 4 months plus, and then we broke out of the trend. We retested and launched off that. But just what a crazy move these last few weeks. Let's go ahead and take a look at some stocks. Amazon really pulling back here. Wow. 215, touched it and got crushed. And we are flirting with 200 bucks again. Jeff Bezos continues to sell a bunch of stock. So we are at, previously this 200 level was what they call the Bezos wall. This is where Jeff Bezos kept selling stock, $1 billion at a time. And he's continuing to sell. So once he is done selling, I do see the case for us breaking out to potentially 230, 240, 250, because there is a decent amount of selling pressure on Amazon right now. down 4.5% almost today. So this chart doesn't look too good. Wouldn't surprise me if we get back down here in the 180s, 190s, and then recover from there and then make our way back up through the Bezos wall. So we'll have to wait and see. Nvidia also, there was some reports of AMD laying off some people, and there were a couple of semiconductor companies that reported earnings, and it looked like the market didn't like to hear what they had to say. So Nvidia pulling back a little bit, still looks pretty constructive here. I think next week is the week. Let's see here. We've got Nvidia earnings on November 20th. That is for sure next Wednesday. So that'll be great. Their expectation is $33 billion for this past quarter, and we'll have to see what they have to say. I'm always very interested with Nvidia. That'll be one of the big headlines for next week. So when we're looking at the chips, the SMH having a little bit of a pullback here as well. Again, just a huge up move this year. Healthy to consolidate the gains here before making the next move higher. So we will see when that comes. Maybe we touch back down at 220, 215. If that's the case, I will probably start to piece out or plan out some dollar cost average into the SMH. We'll have to wait and see. Now the Qs, this one is interesting as well. So we are pulling back as well, and we will see what I think Nvidia will obviously dictate what the SMH does, but I think Nvidia's earnings will also have a big indication on what the Qs will do. Wouldn't surprise me if we have a measured move like we had on this pullback here. So this was 25-day, 15% pullback on the Qs. I drew out a similar line, just a little bit shorter, so about 17 days. We could probably stretch that out, maybe about 30 days and a 12% pullback. Something like this, I think, would be very healthy to see in the Qs, and if that is what we indeed get, I will probably look to do a small dollar cost average around the 450 in the Nasdaq 100, the triple Qs. So we'll have to wait and see if that is going to come my way. Google looking interesting here as well. I would love to buy some Google back in the 165. I have about 1/3 left of the position. This has been the slowest build of a position I've had in a long time. I've just been very patient with Google. I'm not willing to overpay for Google. Not that this is a terrible price, but I want to get it at the right price for sure. So for me, that right price would obviously be this 148 I have an order in. I don't know if we will get there anytime soon, but the 165 will be the more intermediate dollar cost average position I'm looking to fill right there. But I really was blown away by Google's earnings. If you want to know more about that, look at my video history. I did an earnings update on Google. Tesla, like I said last week, just nothing's changed with the business. It needs to give some of this back. Wouldn't surprise me if we drop below $300. I also, the more I look at this chart, the more I zoom out, the more I kind of think we are going to hit all-time highs this year. I do expect a Santa Claus rally this year at the end of the year, just as we get every single year. But it would be healthy for us to pull back before then and then have a nice Santa Claus rally towards the end of the year. And if that would be the case, I do think we could see Tesla up at 415, 420 level, and then a larger pullback from there. But I do think it wants to test those all-time highs, but it needs to regain some energy before making its move back up to those levels. I did sell some calls. I think the 380, 390 is where I have some calls on some Tesla shares, just hedging to the downside. Now, I hope we blow right through those calls, but I do expect us to pull back a little bit more. I'll close out those calls and wait for us to move back up before laying out some more calls. For sure, once we get back above the all-time high, I'll be selling some calls at 450, 500, something like that. So we'll have to wait and see. This afternoon, I did purchase a starter position in Enphase. I'm just slowly going to buy some stock here in Enphase. So I bought about 1/3 of the position I'd like to have right now on Enphase. So This is such an ugly chart. I really don't know where the bottom is, but that's why I'm nibbling in. It may still continue to drop, but the more I think about it, I just don't see solar going anywhere. I could see the adoption rate slowing down, as I've mentioned before, but this is a phenomenal company. They did release a new product that I'm interested to hear a little bit more about it. I watched a short video on it and it looked interesting. It was called Balcony Solar. So I don't know what that means, if it's going to be for apartments where you have these panels that hang off your balcony. I don't know, but I want to do a little bit more research on it. And this is a phenomenally operated business. It's just in a not loved sector right now. So all the solar stocks look like crap. But this is one of the better performing, not stock wise, but company wise, of those solar stocks. Coinbase surprised me today at up 9%. I do have a covered call on some shares for Coinbase. We'll see what the weekend brings us. Crypto is just, it's all over the place, but I would not be upset selling some of my shares. I think I have a 350 call, something like that. Maybe it's 360. So if we get there, I would get rid of my shares. Maybe I'm leaving some money on the table, but I will be locking in some profit. And then let's take a look. Meta. Meta had a big bad day today. I'm not sure why. This looks to be a lot of selling across the board when it comes to technology. Let's go ahead and pull up the heat map here, see what this week brought us. So this is the week. Look at the semis getting killed. So the semis just horrible. Broadcom down 10%, AMD down 8%, Qualcomm 6%, Micron 13%, and all the other ones down 5 to 10% as well. You've got Meta down 6% on the week, Amazon and Google down 3%, Nvidia down 3.5%. And when you look at some of the healthcare, insurance plans, those were deep red. Aerospace was down big as well. I'm not sure what the deal is there. And the financials were at all-time highs. I believe today they hit all-time highs. So we're seeing some rotation here. Technology, out of healthcare, into the financials, and just money off the board here, across the board. People taking profits, which is to be expected after the week we had last week. So that's the heat map for the week. Let's just take a quick peek at the day. It's a little bit more red. We did have Tesla green on the day, but a lot of pain in healthcare, and these semi stocks are getting crushed. Software as well getting crushed. Technology. You've got the food stocks getting crushed, and healthcare. So we will see if there's some more follow through on this rotation. And if so, that's where we're going to see the SMH and the Qs potentially give us a dollar cost average opportunity. So we will have to wait and see what happens next week. And again, a lot of that's going to be hanging on NVIDIA's earnings. So when we look at this week's news, a lot of this I already talked about. Post-election rally, subsequent decline. We did have some earnings. Disney had strong earnings. It was funny, I have a basketball league that I'm running on Thursday nights, and I texted my team, hey, who's in this week? One guy said he's on a Disney cruise. Another guy said he made a surprise trip to Disneyland, and I said, you know what? Disney's got earnings tomorrow. I should probably buy some stock for a trade, but I ended up not. But Disney was up 6% on their strong streaming performance and studio divisions, and good guidance. Rocket Lab is a company I've been following for a while. I had another rocket company that I was following more heavily, but that's when I found Rocket Lab, and so it's good to see them doing very well. It looks like their stock surged 50% after reporting strong earnings, so good for them. And then, as I mentioned before, you had the financials all-time high, and the energy sector seeing a little bit of rotation, and then the tech decline on the week. So the Mag 7, we kind of talked about all of this. We also had Jerome Powell give a speech, which I fell asleep during the middle of. Didn't really talk about a lot that he hasn't said before. But one thing that I did think was interesting in his speech, he did keep bringing back to the economy is doing very well, but we're cutting rates because we're seeing softness in the job market. So that is kind of interesting because all these numbers do point to everything's going really good. So why cut rates? And he's saying we're cutting rates because we see softness in the job market, and we don't want to see much more softness. So they're fearing of more job loss, and then on top of that, you have a week like this week where the semis are one of the hottest sectors in the market, and they're laying off people. Chevron said they're laying off people, so there's still more layoffs going on out there, and so they're kind of seeing that weakness under the surface. And then I think you're seeing some of those healthcare and food stocks have a knee-jerk reaction to RFK. Again, we don't know what the new administration is going to do. The market's making all these moves with, tariffs and RFK and Elon. There's all these knee-jerk reactions. It's going to take time for these things to be implemented and their earnings to be affected. The market cares about earnings and interest rates. All this other political stuff, it's going to take a lot of time for it to make a big difference. And at the end of the day, it's going to make a difference in earnings and interest rates. Those are the things that really drive the stock market. So I pay more attention to those than what some political news show is talking about. That's just me. I'm not a political guy, but I know a lot of people are. So anyways, that's my little rant for today. Investors' concerns over IPOs, I'm not sure what that's all about, but we really haven't seen any IPOs of interest these last couple of years, and there is a handful of companies that are interesting in the private market that are ready to go IPO, but they want to do it at a sky-high valuation, and the market isn't ready to pay for that. So that's what we got this week. Let's take a quick peek at the week ahead. Let's take a look. What economic data do we have next week? We did have the CPI. I don't know why that wasn't in there. The CPI came in line. The PPI came in line. So not a whole lot when it came to the economic data this week. And looks like next week there's really not a whole lot besides NVIDIA's earnings. You've got a bunch of Fed people speaking, and then you got some jobs numbers and manufacturing numbers. So really not a whole lot next week besides NVIDIA. And then I think after that we're running into the holiday week. Yep, but this looks like not a whole lot. The Fed minutes will be interesting in a few weeks. So not a whole lot of data coming up. We're almost through the thick of earnings. We are through the thick of it. We just have NVIDIA, and then from there it'll be waiting for the new year. So we are starting to wind down this year. This is a good time to start checking in on your accounts. Did I max out my Roth? How's my HSA? Am I making sure I'm contributing properly to my 401k? All of those types of things. And just get ready for next year. So that's all I got for you guys this week. Have a great weekend, and we will see you next week. Peace out. Go Hawks.